What events or influences from your childhood specifically shaped who you are today?
Geez, I think that the biggest thing for me was, when I was a kid, I was kind of thrust into a position where I had to grow up really fast. And that caused me, it's funny, I was always hanging out with people about 10 or 15 years older than I was. And then I ended up, when I started investing in real estate, I was 20 years old, and, there were no other 20-year-olds doing that.
Yeah, that's huge. I mean, being surrounded by all these successful investors that are a lot older, they're all probably looking at you thinking, man, I wish I got started when I was that young.
I know, right? And the thing is that, at that time, I didn't know anybody that was successful. So they were probably looking at me thinking who is this kid trying to get into this business? Good luck.
Yeah, right. Well, what did you end up learning from that? I mean, why did you feel comfortable going into real estate at such a young age when there wasn't a lot of peers in it, rather than just going the traditional route?
I read a book that said that you could become wealthy in real estate, and you could buy real estate with no money down. Just simply ask the seller if they'll carry the down payment. And I thought, well, that's easy enough. I was too dumb to know that actually is really hard to do, and that not everybody says yes. But, I found this house and I asked the seller and they said yes. And I was like, okay, that is how this is done. I guess the book was right. So, I kind of got into it. I guess you could say it was intentional, but it was kind of by accident too, because in the real world, or as the real world as we know it, nobody says yes to that.
Yeah, but that's what's so interesting is that it was a bunch of BS before. It was like just this idea out in the world. Somebody wrote this book, but once it actually happened for you, you were able to prove that belief in your mind that it was possible. And obviously you were able to kind of build a phenomenal career after that. At what point did you start focusing on commercial real estate?
That was about 12 years after I first got into real estate. So I had been flipping houses, and I'd even built a few homes, but house flipping was really my main business. I didn't have the money to be a big time investor. So I'm like, I could scrape together just enough cash to buy one property and then fix it up and resell it and then do it again and do it again and do it again and do it again. And after about a decade of that, and the business just started to grow, and then I was building homes, and then after a couple of years of that, I had a couple of rental houses, and I thought, you know what? If I could sell these two rental houses and do a 1031 exchange and buy an apartment building, that would be like the most incredible thing ever. I mean, who would ever have imagined that this poor kid could come in and buy an apartment building? And I actually managed to pull it off. And again, taking another page out of the old playbook, I told the seller, I said, I've got enough money in this 1031 for half the down payment. Would you carry the other half? And he's like, yeah, I'll do that.
Oh, that's amazing. It's the power of the question. If you just ask, who knows? People might say yes. You never
know. The answer is no if you don't ask. So that was how I got into multifamily. And that was 20 years ago, and I've been doing it ever since.
That's amazing. And so now it sounds like you focus majority of your time on the syndication front. Tell us a little bit more. Give us a little bit of color about what your focus is today.
Yeah, when I first was in this business, I didn't have money of my own. The only way that I could do anything in real estate is if I had other investors helping me along the way to put the money in that we needed. So long time ago, about 20 years ago, I raised my first fund. It was a little small $500,000 fund. It was funded by coworkers that I used to flip houses. And then as I grew and then got into multifamily, I'm like, hey, I need to do the same thing with multifamily as I did with single family. If I want to grow this, I need to get investors. And so I went out and found a few people to invest with me, and kind of the rest is history. Now I've got over 1,000 investors, over $100 million that we've raised from high net worth individuals and family offices that have grown this to a $500 million business.
So you've been able to effectively help folks really become hands-off investors, just like you talk about in the book. So, let's dive deep into the tactic here, right? So, on the investor mindset, we always are thinking about like, how do the most successful people, how do their thoughts and beliefs end up impacting the actions they take? But from a tactical perspective, how can somebody start to set themselves up for success to become a hands-off investor?
Well, the first thing you should do is read the book, The Hands-Off Investor, because it may seem simple. There's out there in the world, there's this concept of OPM. Every real estate seminar that you go to preaches OPM, which means other people's money. It means you have a real estate idea that you want to do. Go get other people's money and you can buy all the real estate you want. And the problem is that there was no resource for the quote unquote other people. So what if you're one of those people that is bringing the money to the deal? How do you know if the investment that you're contemplating is not only suitable for you, but is likely to succeed, and that the person that's bringing you the opportunity is going to be the one most likely to succeed in carrying it out? So there was really no resource for people to turn to learn that. So that's one of the reasons why I wrote The Hands-Off Investor. So the first thing you have to do if you're thinking about being one of the other people and bringing money to someone else's real estate deal, first step is get educated and make sure you know what you're doing. And so
obviously, go check out Bigger Pockets, The Hands-Off Investor. You can find it on Amazon. You can find it on BP, biggerpockets.com. Once someone's dove into that book, obviously they're going to learn a lot here from it. But talk to me about what are some of the pieces of the puzzle that people are going to need to learn in order to, be effective.
Yeah, there's a lot of pieces of the puzzle, and the first piece, most importantly, is to learn about how to analyze real estate sponsors. So when you're the person bringing the money, there's also somebody that's bringing the deal and doing all the work, right? And there's a new element of risk that's added to the equation when you invest passively, and that's the person that you're investing with. If you're buying the real estate yourself, you know that there's risk in the real estate, there's risk in the economy. But if you're investing with someone else, you've added a new failure point into the equation. And so one of the first steps is to learn how do you look at a real estate sponsor and figure out if they're most likely to be successful in carrying out this business plan. It's very, very important component. Making the wrong decision could cost you everything that you've invested.
Okay, so we want to dive in. We want to do our due diligence on who is actually operating that, what the team looks like. What else goes into that due diligence process?
A lot is first you want to see, what kind of a track record do they have? Yeah, how many times have they done this before? What does their team look like? Do they have experience? And do they have experience not only in the market that you're looking to invest in? Do they have experience in the product type? So if all they've done is apartments and this deal is a hotel, that could be an additional point of risk. If all they've done is value add and this is a development project, that adds another additional layer of risk. So knowing a little bit about their experience is helpful. Their track record, their full cycle experience. In other words, have they actually gone all the way through an acquisition, operation, and disposition of a property, or have they only bought stuff and never sold anything? Have they survived through a market cycle and seen an adverse market cycle, and did they survive, and how did they get from one side to the other? All those things are critically important, but also their experience and the team and the track record. Those are the main things that you really got to focus on.
Okay, so we dive in, we do our due diligence, we're starting to understand, what their track record looks like, what market they're investing in, the asset type, all of these things. We're starting to feel comfortable in that sponsor. We feel like as a team, they're the right folks to manage this business plan. What next?
Yeah, the next is to look at the offering that they're presenting to you. And so, there's a number of different fronts you're looking at here. The first is the investment suitable for you? If you're a retiree and you're living off the cash flow of your investments and they're presenting to you a development deal, it's probably not suitable because a development deal isn't going to throw off any cash flow. If you're a young tech entrepreneur who's got a lot of extra disposable income but no time to invest in real estate and a high tolerance for risk, and all you're looking for is capital growth, and the investment being presented to you as a stable Class A multifamily asset with no upside potential, that investment might not be suitable for you. If you know that you're going to need this money in 2 years to go, buy a home, and you're looking at a 10-year investment play, that's probably not suitable for you. So the first thing you got to look at is, does the investment meet your objectives and your needs as to when you're going to need to get your capital back, but also what kind of distributions are you going to need in the interim. So that's the first step, is to really understand whether it's suitable. The second is to understand whether you think that the sponsor's business plan makes sense. And, if you're looking like right now, we're in the middle of this COVID-19 pandemic. And if you have somebody that's proposing to build a 400-room hotel in a small city, you might be thinking, well, no one's traveling right now. Is that really a good idea to be doing that? So you want to have a sense of whether or not you think that the business plan makes sense for the time we're in.
Today's episode is sponsored by VonFinch Capital. If you're interested in investing alongside me in the same type of real estate opportunities that I personally invest in, then head over to VonFinch Capital and join their private investor network. You can do so at vonfinch.com/invest. Join me on that next deal, and I look forward to seeing you on the inside. Thank you for listening to the Investor Mindset Podcast. If you like what you heard, make sure to rate, review, subscribe, and share it with a friend. Head over to theinvestormindset.com to join the Insider Club, where we share tools and strategies from the top investors and entrepreneurs on how to take it to the next level.